Hi viewers, thanks for tuning in to today's video. We're thrilled to have you here. If you find our content valuable, please hit that like button, share with others, and subscribe for future updates. In today's video, we are going to talk about the rise of Buy Now, Pay Later industry, or BNPL in short. BNPL is revolutionizing consumer finance, offering flexible payment options and reshaping spending habits. In this video, we will talk about how it works, key players in the industry, business model, that is how do they make money, challenges, and opportunities for the sector. Buy Now, Pay Later services have gained popularity especially amongst the younger consumers and is transforming payment habits. It makes online shopping seamless by allowing consumers to make immediate purchases with interest-free installments. As consumer preferences change, retailers as well as payment players are adapting to cater to the same. BNPL works by integrating with retailers and providing as one of the payment options as customers proceed to check out, both at online and offline stores. This payment option competes with other methods, especially credit cards, and enables to shop as usual while they undergo soft credit check in the background. While BNPL provider will repay retailer in full, consumer repays back to BNPL provider in 4 installments or longer depending upon the type of purchase. BNPL competes directly with the traditional banking by offering easier credit access with often zero interest rates and faster customer acquisition through seamless retail integration. This easier access appeals especially to the younger consumers as opposed to more slower relationship-based customer acquisition process followed by the traditional players. Key BNPL players include the likes of Afterpay, Klarna, and Affirm, as well as the more established players like PayPal, who are leveraging their vast customer base and related data to provide installment offerings. Each player has leveraged unique strategies to capture market share and drive consumer adoption. The appeal of the sector is demonstrated by the valuations achieved by these players. For instance, Afterpay was acquired by Block for $29 billion in 2022. BNPL providers generate revenue through multiple revenue streams. Merchant fees and interest on longer-term loans contribute towards a significant proportion of their overall revenues. These players are able to charge retailers much higher fees than, say, credit cards, as it results in lower cart abandonment and increased sales. These players have been also exploring ways to monetize data, as well as generate gains by selling their loan pools to investors, that is through asset securitization. One key challenge these players face is the high customer acquisition cost, as they must invest heavily to partner with merchants and offer BNPL at checkout. Additionally, significant investments in technology and data analytics are essential to ensure secure, fast transactions and effectively manage credit risk. Now, let's look at an example to better understand the revenue and cost drivers in the industry. The industry has experienced strong growth over the last 5 years. In this case, Affirm's GMV increased tenfold, reaching over $26 billion. This highlights the growing popularity of BNPL as a payment option. Affirm achieved over $2.3 billion in revenue, with close to 90% coming from network and interest income. While costs have been growing at a lower CAGR compared to revenues, the company successfully narrowed its operating loss to $600 million. Affirm is effectively leveraging scale and network advantages, positioning itself on a path to profitability. Affirm's revenue and cost drivers, as a percentage of GMV, show stabilized revenue and decreasing costs, signaling potential profitability through scale and network benefits. The company generates close to 9% of its GMV in overall revenue through a mix of network fees, interest income, and gains on the sale of loans. On the cost side, significant investments are required in sales, marketing, and technology, alongside managing credit losses. This balance is key to sustaining growth while working towards profitability. BNPL companies' share prices have dropped significantly due to market conditions, increased competition, and profitability challenges, despite strong revenue growth. In this example, the company's market capitalization fell to 1/4 of its peak, from $48 billion to $12 billion. To understand this sharp drop, we need to examine the levers. The key reason was the compression of the price-to-revenue multiple, which dropped from 55 times to 5 times. As a result, even though revenue increased by 2.6 times at a compounded annual growth rate of 39%, the market cap fell to just 25% of its peak value. Similarly, Klarna's fundraising journey has seen major valuation swings due to its growth plans and Fintech sector volatility. In June 2021, Klarna raised $639 million from SoftBank's Vision Fund, valuing it at $45.6 billion. By July 2022, an $800 million down round led by Sequoia Capital dropped Klarna's valuation to $6.7 billion. The sector faces growing regulatory scrutiny, increased competition from incumbents, and economic challenges. Balanced growth with responsible lending practices will be key for the sector to evolve. There are opportunities in new markets. Integrating advanced technologies for better risk assessment and developing value-added services will further fuel growth. Subscribe to stay updated on the latest BNPL developments. In an upcoming video, we'll explore how a specific BNPL player has achieved profitability and examine their unique competitive advantages. Let us know in the comments who you think this player might be. The BNPL industry will likely see consolidation or increased collaboration with incumbents. AI-driven credit decisions should help reduce default rates, while expansion into new sectors will provide additional revenue streams. Players may also explore potential blockchain integration to enhance security and transparency. BNPL providers are targeting emerging markets like Southeast Asia and Africa, where unbanked populations and growing e-commerce present significant opportunities. Successful BNPL global expansion requires adapting to local financial behaviors, regulatory environments, and cultural norms, ensuring acceptance and growth. The rise in cross-border transactions also opens doors for the sector, enabling consumers to make interest-free international purchases in installments using local payment options. Thank you for watching. We hope you liked the video. Please do like, share, and subscribe for more insightful updates.